Welcome, I am Ernie Goss. I'm Professor of Economics here at the Hyder School of Business at Creighton University in beautiful downtown Omaha, Nebraska. Here I am to report on our survey, the Mid-America Survey, the Mid-American Survey of Business Conditions for the month of September here on the first business day of the month, October the 1st. And thank you for tuning in. Thank you for joining us. Of course, the Mid-American region stretches from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, and we're reporting on what we call a leading economic indicator, again the Mid-American Business Condition Index, and it tells us what's going to happen for the next 3 to 6 months. Now, what is the index telling us? And I'll call it the canary in the coal mine. This is a survey of supply managers, businesses in that 9-state region. Growth falls below growth neutral for the second straight month, and that's again for September, down significantly from August, which was below growth neutral as well. Falls to 47.7 from 49.6. Obviously, moving in the wrong direction, and the level is not good. The employment falls from 52.0 in August, which is pretty good, to 42.6, which is not good, below growth neutral. Now let me explain. The index ranges from 0 to 100. 50 is growth neutral. Anything above 50 is growth positive. Below 50 is growth neutral. Obviously, 42.6 is not good. The manufacturing sector in the 9 states shed or lost 15,000 jobs over the last year, so that's about a negative 1% pace year over year, so that's not good. Now, our index, let me warn you a bit, our index is heavily weighted toward manufacturing, so you could see the overall numbers for the economy looking okay, the manufacturing sector not as good. Now, let me show you, bring up here a chart of the Mid-American Business Conditions Index and compare it to the national. There you see in red the U.S. number, which will come out later on this morning, and there in Creighton, beautiful Creighton blue, you see it heading lower, and it's been down. This is the third consecutive month down. Again, the second consecutive month below growth neutral. Obviously not good. A lot to do with energy, a lot to do with agriculture, a lot to do with manufacturing, with a strong dollar hurting us abroad. So that's a real issue, a real problem, especially for this part of the country. Inflationary pressures down again. Now that's, normally we'd think that would be a good thing. Well, not from the Federal Reserve standpoint, and we've got to pay attention to the Fed. I'm an economist, Janet Yellen's an economist. She sets interest rates, I don't set them, but that's a real concern. The index moved from 47.6 in August to 46.8 in September. And again, this is the lowest since the recession, and that's in May of 2009. Export orders down 42 to 42.4 from 50.0 growth neutral in August. So exports, I had expected that number to be heading lower earlier than this. So it's not surprising given the strong dollar, which makes our goods less competitively priced abroad, so it's not surprising to see growth, the export number below growth neutral. But at 42.4, that's a little too weak. Now, what should you watch for in the next month? This is the employment report comes out tomorrow. That's, of course, Friday. And keep an eye on the employment number, of course, should be, say, 150 to 200,000. That's the range of no impact. That's what we're expecting. Unemployment rate may tick lower, but probably going to remain about the same. Keep an eye on the October the 15th. We come out with the Bureau of Labor Statistics comes out with its what I'll call the core CPI, which takes out food and energy. Keep an eye on that number. If it comes down, that's a problem. Again, now normally you'd think, well, that's a good thing. Prices coming down. Not really. The Fed's concerned that that's an indicator of a weak economy. Now the next thing to keep an eye on is the Federal Reserve, the Open Market Committee. That's the economists that sit there and set interest rates for the economy. They meet on October the 27th and 28th. On the 28th, they'll make their announcement. It should be for a rate hike. I'm concerned that the Fed is going squishy on us, meaning they don't give us this confidence we need that, hey, as Bill Clinton has said, our President Clinton, I should say, sometimes it's better to be strong and wrong than weak and squishy. Now, that's not quite what he said, but I'll paraphrase that. I think the Fed needs to come out, and I think we're not in a crisis mode, and that we've got crisis interest rates. We need to see, in my judgment, a 25 basis point interest rate hike then, and I'd like to see that. I'm concerned that they may not do that. So those are the things to watch next month. Now, what are the risk factors? Well, one of them is just the Federal Reserve, their indecisiveness and lack of any clarity. I think they need to be, again, very strong, very confident, and I think they need to raise interest rates. Well, anything other than that, I think is going to not be good for the economy. Keep an eye on the stock market. Unfortunately, that's not the real economy, but it's influencing the real economy, and it is influencing the Federal Reserve. I don't think the Federal Reserve needs to be watching what's going on in the stock market. I think they need to keep a closer eye on the real economy. I'm concerned that they're not. What else should you keep an eye on for, what are the risk factors? Sorry about that. Short-term interest rates. If those begin to head higher between today, October the 1st, and the 27th and 28th when the Federal Reserve meets, if they are headed higher and the Fed fails to raise rates, that could be something that would be a big concern to me and, of course, investors. So those are the things to keep an eye on, and the risk factors. Well, thanks. That's it, folks. I think it was well, I was going to say it was a good report. It wasn't a good report, showing weakness in the 9-state region. And thank you for joining me today. Here, Ernie Goss with the Hyder School of Business with Creighton University in beautiful downtown Omaha, Nebraska. Until we meet again, that'll be November the 2nd. That'll be the first business day of November when I'll report on our survey findings for the month of October. Until we meet then, may your economic cup runneth over, and thank you.